Post-elections is, with us now, and we want to have an economic outlook of, the country and how we're doing. Are we faring? Are we picking up the pieces? And if we're picking up the pieces, how many pieces are we picking up? Are they able to help us drive the other elements of society, leadership, governance, as well as development? So Uganda's post-election period opens a critical window for economic repositioning, while government and the multilateral institutions are projecting a strong term growth driven by oil, but the oil has not yet started its production, infrastructure spending, and also agriculture. The transition also does expose some structural risks. Fiscal pressure is rising, compliance costs are also tightening, access to capital is also remaining uneven, and in such an environment, some businesses are even emerging stronger while others are struggling to adjust, and perhaps as we speak this morning, others have even collapsed. We unpack the dynamics that are shaping Uganda's post-election economy and what lies ahead for businesses. Joining me for this discussion, to my immediate left, I do have Jarvis Atwine, who's an economist and with expertise in macro fiscal policy and public finance. Mr. Atwine, good morning to you.
Good morning, and thank you for hosting us at NTV.
It's a pleasure to have you. Next to him, we do have Ronald Kwesiga, National Unity Platform Secretary and National Publicity Secretary, NRM Entrepreneurs League, representing the perspective of politically affiliated business networks as well as SMEs. Good morning to you.
Good morning. Maybe to correct that, I'm Eibu Charles.
Oh, right.
Yeah.
Yes. Oh, Eibu Charles.
Eibu Charles, yeah.
All right. Thank you so much for that correction. Eibu Charles, an economist.
No, I'm a civil engineer.
Yeah.
And I'm a retail investor under Uganda's capital markets.
Okay.
Yeah.
All right. Speaking of capital markets, how do we stand as a country picking up in 2026?
The outlook is going on well. Currently, we have reserves about of $4.3 billion. I think those are forex exchange reserves, and we are seeing that our capital markets, especially bonds. Our bonds are falling, the bonds rates are falling as seen in the last auction. From levels of 17.7%, right now they're trading at 17%. I think government is trying to tighten, maybe because of elections. They want to reduce on the spending, so they want to take on less expensive
But it's
trades.
the government that did most of the spending in this electoral cycle, so why then tighten and make the rest of the country suffocate?
The fiscal discipline, trying to reduce on the expensive debt, because they've borrowed a lot, so maybe trying to manage debt. Yeah. Then the stock markets, our Bowser did well. I think in East Africa we number 2 behind Kenya. The last financial year, I think from January to December, our markets returned about 30% compared to Kenya, which returned about, I think, 60%. Yeah, on the all share index. Yeah.
Okay, all right. On that note, and given a regional economic outlook, Atwine, how do we look like in terms of economic outlook, given the fact that we are having an election wave? Tanzania last year, Uganda this year, Kenya next year, you do have Congo that will be following through, and the instability in South Sudan. That's just within the region here.
Yes, the macroeconomic outlook, basically I'm looking at the trend. You've talked about Tanzania. We know what happened last year and the anxiety that it created. That scares investors in Tanzania. Then you come to Uganda. When you reach at the airport, someone who reached at the airport on 13th, a few people coming in and a few people going out. And who's getting affected? The common man here, the Uber driver. Airport taxis are stuck. The airport looks like abandoned. We come back to Kenya, preparing for the next year's general elections. Anxiety is building up. Some things are withheld. Let us see what happens in Kenya, because investors are on the outlook to see how do we go to Uganda before elections, and now how do we move in, because we know that Kenya being the feeding pot to Uganda, if there is an issue in Kenya's election in 2027, it's going to affect the whole business. We cannot move in. So you find that the whole aspect of...
Actually, we did, because the last Kenyan election, there was closing of borders.
Automatically.
For us to Kenya.
So what does that speak to you, who is an investor, who is actually projecting your incomes in the next financial years, 2 or 3 years? You would say, is it okay to invest in the East African region now, or I first wait up to 2027? That affects many people. So for me, I would look at it to say, when we talk about the economy, there are a few things that feed into the economy. You're talking about the fuel stations. From December, because now families have been overspending. There is a lot of liquid cash people are spending for Christmas, and now they've overstayed in the villages. The roads in Kampala have been dry until after elections. Jam is starting to creep up. What does that mean?
The fuel price has also gone up.
Fuel prices are going up.
Yeah.
You have gone to the markets to buy some foods. You know what is happening? People have not opened their shops downtown during the elections for the last 2 weeks. What does that mean to their families? For the children, you put a program for the schools are opening soon. Where is the school fees going to come from? What is going to happen? It benefits somehow in one way or the other. There is always a beneficiary in such a kind of circumstances. Money lenders are ready to lend at a higher interest rate. That affects a common person. And when you are talking about the GDP per capita, that's when you come in to analyze that the economy is a bit shaky. The investors are not coming in with monies. There is a hoard. Everyone is just on the outlook to understand that the political dilemma that we find ourselves in these elections, they are hurting in one or the other. In my proposal, I would say that they should extend even these election terms to 10 years, after 10 years, so that people can work. Because we are coming from elections in 2026, by the end of the year, Electoral Commission is going to come up with a roadmap of 2031. And they've not yet finished the elections already, but they are starting a roadmap. And that creates anxiety, and that becomes a lifestyle of an economy, a small economy like Uganda, whereby any time they shut down internet, you lose over 36 billion. And that's a lot of money to finance a project or a road somewhere. So for me, to the viewers, to the analysts, to the political players, the decisions that we need to make in this current term of office as parliamentarians, extend at least 5 years to give people a space to work, space to realize where the gaps are, and also a space to give investors a 5-year projections to ensure that at least their businesses can run for 5 years without any interference politically. For me, that is a big effect that has actually, I'm looking at the general view of the East African community to think, is this kind of 5-year democracy plan working, or it is impacting us?
But you see, the consideration and recommendation you're giving would have to cut across the region, because it can't apply to Uganda, and then the other 7 countries still remain in the 5-year term.
Absolutely.
And also, that being said, of course, now the cycles are continuous.
Like for Rwanda, it is 7.
Of the 5 years you're speaking about, 4 of them are elective years across the region. So you only have one, functioning year across the region, which is not also determinate. It's 2 countries. Now, that being said, let's talk about the actual economic impact of the internet shutdown.
Yeah, the actual economic impact on the internet shutdown. So let's take a case look of small micro traders who sell stuff online. Let's look at a trader maybe in Gulu or Kampala who sells merchandise online. So that internet shutdown affects them. We have customers wanting to buy products, but they're not able to. And some of these businesses feed hand to mouth. So if internet is shut down, some of them collapse. So I think even in this period, there is a possibility that some of the businesses have failed, have collapsed. So even that, for example, we saw a statistic that said that I think telecom companies lost about 24 billion. That's a lot of money. So it affects investor confidence, people watching from beside foreign investors. That brings uncertainty, investing in our markets and having faith in the government.
Okay, what vulnerabilities were created within the digital economy specifically?
To look at that, vulnerabilities. To look at that, we saw money. We had a fiscal shock, because elections are more like a fiscal shock. So, because of the fiscal shock, government tends to increase on its spending. Government is spending on security. There's logistics. Campaigns have to be funded, and because of that, what is being invested in, look at it in terms of an opportunity cost. These are things that are not really generating income to the economy. This money would have gone to sectors like health, roads. So ideally, the economy took like a pause. It slowed down a bit.
Yeah.
Take it like you're driving in traffic. When you're driving in traffic, you slow down a bit, but doesn't mean that the economy is going to stop. Yeah. Yeah.
Okay.
Eventually, it starts picking up.
Yeah. Yeah. Atwine, is there something you'd like to submit to that?
Automatically, because you are only looking at the internet shutdown. We've talked about most people in the city centers are selling items online. We had a discussion prior on that. They are selling online. Internet is down for about close to 5 days. That person is not trading. There is mobile money shut down. People are not
fintech.
You cannot even send money anywhere, meaning that you cannot transact with people in Guru. They want to see money on phone, and even when I have money on my phone, I cannot even send it out, or I cannot withdraw it. So, and that runs for 5 days. And there is an anxiety that even in 2031, it is going to be the same. Internet is going to be off. I'm not going to be transacting. The EFTs were held, those ones that were between, and RTGS that were between 13th and 18th, and actually up to 20th, monies could not move through different banks.
There was actually a cap, I think, transact up to 500,000.
Absolutely. Yeah. So for me, you are not cutting out only internet, you are cutting out very many aspects. You are cutting out communication. You are cutting out proposals and biddings and people looking out for businesses, and people are like in a box. You're actually off in this kind of global transformation. We cannot talk about being there without internet. Internet is now like now a need, and when a need is cut off, meaning that the person is vulnerable. And the after effects now is to say at the end of the month, people have got to pay rent, they are going to pay school fees, and people who are planning for this country, you are putting at the start of every year, you are having elections after 5 years. Where does that leave our growth and our plans to be into the middle income status? I would call upon that it's not being selfish politically, but if they can, for the sake of businesses, for the sake of the economy to grow, I would think that if 10 years is hard, propose a 7-year plan so that people can have at least 3 years free of elections and they can concentrate and work, and thereafter then we can resume, because there is a lot of electioneering. People have sold homes to go and campaign. I've known people who have actually taken 1 billion to invest in elections, and you're like, how is this person going to recoup this money? Is politics now becoming business? So personally, I would actually commend that there should be longer term plans in how we are going to conduct elections, but also would wish to put some strict measures on on how spending is done during elections, to say, maybe should we go for universal suffrage so that a few people can vote? Because now a person has got to bribe every individual in the village to ensure that he comes to parliament. And then you will ask, is that person not going to be corrupt in trying to recoup the money that he inserted in the election? Imagine imagine 2 billion put into an election of an MP.
By one individual.
And he's going to earn
putting 3 billion,
30 million per month.
Yeah.
He's going to earn 20 million per month as a salary, and he has put in 2 billion. Where is the other money going to come from to ensure that he pushes? And remember, now he will be planning for 2031. So I feel it creates, we live into a vicious cycle that cannot help economies grow, because they are always concentrating on who is coming in the next. And you know, the media, you always have the projections politically. So who's coming in 2031? Who is losing out? And now that becomes a trend for the country concentrating on such a kind of challenges. Okay. I think political players have to come into concession that these things are affecting growth and development of economies.
That's being said, let's talk about the spending thrift that we saw during the season. The Electoral Commission's allocation in the financial year 2025-2026 stands at 838 billion Ugandan shillings, but a recently approved supplementary had pushed that to 1.3 trillion
in elections.
And this is just elections.
And now
how much strain does this level of election spending place on the economy?
That is more than a road from here to Gulu, and it is spent in elections. Just actually, I would say that that money is even too much to construct even a road or renovate.
Eibu.
Yeah, and maybe we saw there was a supplementary budget on that, I think. Yeah, so that increased because now government borrowed a lot. So this brings, I think, inflation and interest rate pressure, because now if government is borrowing, the yields on treasury bills and bonds are going to go up. So this outgrows businesses, because now businesses will mean that they'll have to borrow at expensive interest rates. Yeah, that said, then I think there is cash flow pressure on government. There is limited, because now they've spent a lot. Now service providers are going to be affected. There will be delayed payment to service providers, because now government doesn't have enough cash flow. And
the delays could stretch for years.
Yeah. So ideally now what government has to do now, they are going to look at having more fiscal discipline, tightening controls, budget reallocation, so that to find a way of managing the budget.
Speaking of budget reallocations, we're in a budget cycle right now for Parliament, and they're budgeting for 2026-2027 framework paper, especially in terms of trade-offs between governance, costs and service delivery. Where do Uganda stand to benefit from the next financial year?
Ideally, where Ugandans will benefit from, because now...
Or what signals does it send between, all that spending that you've talked about versus what they have to plan for the next financial year?
Maybe to plan for the next financial year. So what ideally government now is going to do, because now we saw in the last budget allocation, I think the Q3, I think Ministry of Finance allocated about 16 trillion shillings. So we are moving away from the election fever. So government is now going to try to stabilize the economy. Yeah, because now if you look at the statistics, I think World Bank showed that projections, our economy is still growing. It's going to be growing at about 6 to 7%. So ideally, still the economy has to be managed, and government has to find ways of including everyone, so that everyone benefits. Businesses have to continue thriving, and managing agriculture, and also we have oil coming in. Remember, elections are more like they slow down the economy, but if oil production starts, it will bring it's more like an accelerator, because projections show that maybe the economy will grow at about 10% after oil comes in, and oil comes with increased forex gains, employment. Yeah, businesses will benefit and employment will be created.
Eibu there has used the if clause in his submission towards the expected commercial production, such as oil, which then also brings about the question of oil delays and production as well as growth of the economy into the next financial year. That anticipation of commercial oil infrastructure investments as well as agriculture. Do we see ourselves as a country realizing growth in the midst of all of this?
Automatically, because I was shocked by some investment agencies that are heavily investing in real estate in Hoima, for example. You see, this growth, the way it is determined, it's not just oil flowing. There is a lot. There is an airport now in Hoima. There is a stadium in Ankijet of maybe sports African Cup of Nations coming in 2027. There is a plot of land around the stadium, 15 kilometers from the stadium, is now going at 30 million in Hoima, which is actually shocking. Yeah. And I've seen more out of my 20 friends, most of them actually have acres. There is that kind of people. People are predicting that there is something good that is going to come out, and majorly, though there is still a need, because now people are constructing hotels to feed the expectation of oil production. And for me, I would think Uganda would be on the right trajectory if we keep the spectators of how the economy is performing at bay.
How do we keep the spectators? Of course,
by but you allow government to flow quickly in ensuring that oil starts coming through, so that it doesn't kill the mood of saying, I think this project cannot go. Already we had, that is Uganda Petroleum Authority, announcing that in 2026, oil is going to start flowing. But when you go to Tanzania, they will tell you that it is 80% complete. Here in Uganda, no one tells you whether we are starting in June, whether we are starting in December. We are talking about 2026. We don't know when, we don't know how it's going to work out. So it keeps the anxiety of saying that maybe things of government don't even work.
In that case, if we are not even that sure of when the exact period of start for oil production will be, and Eibu, this is to you, then what are the other low-hanging fruits of growth projection that the economy of Uganda can rely on?
Ideally, the other, apart from oil, because right now the major economic, the major thing that has been causing our economy to grow, I think we've been relying heavily on agriculture. So ideally, government has to put in policies so that the agriculture sector is protected, increasing cash flows maybe to manufacturing, because right now, because of elections, maybe we have people investing more in treasury bills and bonds, because government is borrowing, and that doesn't bring production in the economy. So government has to look at how do we support the manufacturing sector, how do we support agriculture. These sectors have a lot of they employ a lot of Ugandans. So ideally, I think if they are supported, maybe they will be like balanced, to be balanced. We won't really rely on oil a lot, but to be balanced across all sectors.
Okay, yeah. All right.
Maybe it's chipping. I think it is just an addition to have, like, we didn't have oil. It is also coming in as something that we can recoup in some money. Not a lot, because Uganda, we should still heavily rely on agriculture and ensure that we have food security. We ensure that it's food security. Agriculture is still employing many people. People are very hungry about the pricing of coffee. Coffee is becoming an issue everywhere. Everyone wants to plant a tree of coffee because the people have realized money there. Even in the village person, a kilo is going at 15,000. You can imagine if someone has 100 kilograms. So every kid, every child, every boy, young and old, they are targeting to recoup from this coffee. I think all we have to have a balanced kind of production levels to say all sectors are covered up. Agriculture, industrialization, agriculture, I'm talking about commercializing it, because I think that's what is much important. For me, I see Ugandans being hard workers and people who have an entrepreneurial spirit. I feel like we might not get affected like other economies around East African region. We still remain a hub to reckon on in terms of political stability, a bit of food security, feeding countries like South Sudan, which is not stabilizing up to now, regardless of having oil, which you are talking about. They are rich in oil. They started a long time ago in producing, but it has not helped the economy to grow. So we cannot heavily say that when oil comes in, everything in Uganda is going to be.
Actually, when you put it that way, then you trigger me to think of Nigeria.
Absolutely,
they're the biggest oil production on the continent.
But the northern part, the northern part of Nigeria, people are dying of hunger. So let not all Ugandan eyes.
It's not a magic bullet.
It's not a magic bullet. It's not going to come in to solve Uganda's problems. Other key sectors have got to come in and be boosted up to ensure that we remain balanced.
So what are the key sectors that have to be also given as enough investment in order to then reap what we are sowing?
I think commercialization of agriculture comes with, for example, setting up, you are producing much coffee. Are you setting up processing factories all over the country to ensure that this coffee that is produced has,
other than the one that has been set up and all of Uganda has to go to Western Uganda?
You have only one,
which increases the cost.
Absolutely. We produce a lot of coffee in Mbale. What is there? We produce a lot of maize in northern Uganda now. What is there? Are we just sending maize, or we are sending processed posho at a kilo just increases from 2,000 to 4,000. I think for me, value addition is going to play a key role. We have to ensure that everything is commercialized. We have to ensure that infrastructure development is not compromised. We have to, because that's what grows our industry, our tourism. And maybe lastly, we also talked about all sectors, and tourism, we've not given it a hint to say it has been affected in these elections. From December, we've had few tourists coming through, as we talked about how they come through our borders, porous borders. What does that mean to say, now that the elections are over, can we stabilize as Ugandans and we say we are going to work, let us invite people to ensure that money flows in?
Eibu, public debt being projected to remain above 50% of our GDP, with the IMF maintaining that Uganda is having moderate risk towards our debt stress, particularly in terms of growth and the revenues underperforming. The question being, what economic tasks await the next leadership in order to again and leapfrog us into the middle income status, and how can Uganda realistically manage the debt burden without stifling?
Yeah, first of all, maybe for our debt being 50% the GDP, I think very many countries are living within that. So ideally, what is supposed to happen is, how does government manage this? Debt is not bad, but how you manage it. So government has to work on improving on the economy, because if the economy is managed well and it outpaces and it grows, it can help in managing the debt burden. And what government has to do is they have to come up with ways. Maybe one of them is protecting growth. Our sectors, agriculture, manufacturing, telecom, the tourism sector. So they have to be protected so that it leads to growth of the economy, so that we can manage debt. Another thing is raising and widening the tax base without choking the economy. Yeah, so ideally, you are coming in with a stricter enforcement. They will lean more towards compliance rather than punishment, because there is this thing of, if you're not being compliant, there are heavy penalties. So they should look at more like compliance, formalizing businesses, so that we can have more more revenue coming in and widening our tax base.
Wow. Yeah. Despite the historical narrow tax base, the financial of 2026-2027 national budget framework is targeting domestic revenues to about 40 trillion, up from the 37 trillion Ugandan shillings. At the end of the day, with what he has said, you formalize businesses and have a strict compliance, but at the end of the day, you're looking at higher taxes. Expected taxes in the next financial year, and then service delivery also must be effective in all of this. Where do we stand, especially in terms of revenue targets versus the tax burden? I
saw the Deputy Commissioner announcing that they've collected less money as expected. That means that what they did not collect, we've got to borrow to ensure that we finance our budget. To me, I would say it's not about widening the tax base, because whom are you going to tax? You are an employee of NTV. They are going to continue increasing on are they going to increase on your pay as you earn?
They're going to tax the lunch I eat at NTV.
The lunch you eat. So that is a strain, but it creates a small margin. For me, I think for example, if there is an introduction of 2 industries per region, and they are employing about 10,000 or 20,000 people, these people are bringing in more pay as you earn. You earn more than saying that I'm going to tax the existing tax population. People who are paying tax, they are few. You cannot continue introducing taxes on. It becomes a burden, and people are going to start evading. For me, to avoid evasion is to say government or all key stakeholders have got to look at which other avenues are we going to raise finances, because 50% of the budget is being financed by our collection, our Uganda Revenue Authority, and now the other 50% has got to come from domestic borrowing, grants, yeah. and that keeps us vulnerable. For me, I think it's high time we start looking at how best can Uganda become independent, live within the confines of our means, and try to stop this corruption and all such a kind of issues. For example, just let's talk about the Sabara Road, which was going to be constructed. People had given in land. When government started construction, someone came in and said, you people must be compensated. The budget for Sabara Road had to triple because there is compensation. It delayed. A person who wanted to projected to construct a hotel on that place, he had to stall for about, they are resuming now, about in March?
Yeah, they are resuming.
They are resuming construction. 2 years down the road, you bought a piece of land to construct a hotel with the projection of saying that I can make money out of it. Now that investor has been withheld. Okay. For me, my lookout of things is to say we need to look at how best can we increase in our projections by bringing in more industries, more growth in IT sector, and all sectors to think proactively than thinking of we are going to continue borrowing. 50% is high.
That being said, let's judge that by the current financial year and some of the tax waivers and exemptions that were in the current financial year. Startup tax holiday, the tax penalty waiver, the stamp duty, to mention but a few. What has been their performance thereby ripple effect into the economy? Eibu, can you speak into that?
Maybe I didn't get that.
For me, maybe I could pick it up from you. I would say that, you see, those are like attractions. You are trying to attract investors that if you come in, or maybe local investors to say, come in, we shall give you, come in and invest, build up a factory, we shall give you a tax holiday. A foreign investor, come in and invest, we shall give you a tax holiday for about 5 years. So to me, those are, government cannot run off from them. They are important to ensure that you bring in more players into the market so that you can widen your tax base. Right. But if you don't do that and people feel like, I'm starting off my financial year and I have got to pay all these taxes, people withhold, or maybe they look to invest in other countries.
So some of these waivers are running for as long as 3 years. So
absolutely.
That affects the next 2 financial years. That being said, as we are closing this remark, we must find some positive ground and encouragement to the, especially the business community, investment community, and the general outlook of the economy by and large moving forward. What are the expected outcomes, and where's the hope of Uganda's economy, Eibu?
The hope is because, like I said earlier, projections are showing that our economy is going to grow by 10%, I think, from IMF. So right now, our hope relies on oil at the moment to accelerate the economy, because right now it's at 6-7%. So when oil comes in, maybe we shall reach 10%, 11%. Yeah, basically that. I think it's oil now. Okay. It's what we are looking at.
All right. And
projections show that maybe, let's hope by end of year.
Okay, Atwine.
I would call upon Ugandans. Elections are over. Let's encourage our friends out there in other countries that Uganda is a stable country, so they can come and invest in our country. This is our country. Beyond our political divides, we have to move forward. We cannot keep on rubbing our country being in the worst situation, because at the end of the day it will affect our great and our grandchildren. I would request that all those who are listening out there in the diaspora come back to Uganda. Tourism is booming. We have a lot at stake. I would say that I would encourage also those who are political players, unite people so that we can get back to work and ensure that we resume where we had stopped, because we had been in a stand.
Well, Morning at NTV resumed where it stopped, and we're glad to bring you these conversations, just helping you understand the way forward, especially when it comes to the economy. The reality on ground right now is that our policymakers do have a challenge. One of those is to stabilize the confidence of the people, protect productive sectors, as well as ensure that the political transitions we are facing right now do not become economic shocks from businesses to citizens alike. The post-election moment is not just about recovery, but it's about adapting to a new economic reality. I thank my guests for their submissions, and I trust that it's